Back with y'all with another FOREX video. This one's gonna be a little tutorial. It's gonna be a tutorial on my trading strategy. Yes, I'm revealing my trading strategy. All shots out to Doyle Exchange for putting me on game with this strategy. It's a simple strategy. Nothing too much. There is basics, of course, and there is intermediate, confirmations that could go along with this strategy. So let's get into it. I'm gonna start off with the basics being higher highs, higher lows, lower lows, so forth. So on the start of a trend, this will be a high. This will just be a high. This will be a low. This will be a lower high. This will be a lower low. This will be a lower high. This will be a higher low. This will be a higher high. This would be a higher low. This would be a higher high. If that didn't make sense, just kind of rewind it until you understand. But that's about as simple as I could get that. You would use those to determine change of trend or break of structure, so forth. So let's go over break of structure. These lower lows and lower highs confirm that is in a downtrend. But once we get here, we see that this lower high gets broken by a higher high. I know this might be confusing to people that don't know what I'm talking about, but if you already understand this, you can skip to the video a little bit. This is more so for the people that don't really know structure. So with this break of structure, this is a confluence that the trend of the market is about to change or about to throw in a fake out. So my supply and demand setup. This is one example that I found in the markets. I'm not sure if I traded this one. This was actually a few days ago, but it was just a good example for the video, for video purposes. This is London session. Nope, I'm sorry. This is New York session. So this is New York session. After the stock exchange market opened up, it created a supply. A supply is the previous blue candle or bullish candle before a drop and a break of structure. Where was the break of structure? Right here, right below this wick, this doji right here. I'm sure if you go to the 1 minute, you can actually see it a little better. But it was a drop, a higher high, and a lower low, breaking that structure right there. So that's confluence number one. Number one, break of structure. Number two, what are we looking for? Secondly, is there a gap? What do you mean, is there a gap? After the supply candle, did the market leave a gap from the candle before to the candle after? Yes, we have a little gap right from here to here. There is a gap right there. Markets have to fill their gaps to correct themselves. So number two, is there a gap? Yes, we have a gap. Okay. Number three, what are you waiting for after number three? After you have these two confluences. So number one, we want to wait for the market to go back into our supply zone. At 10 o'clock a.m., the candle threw a wick going into our supply zone. Price goes back into supply / demand. So after price goes into that gap, you wait for a break of candle. The break of candle is the next candle after the candle that goes into the zone. So it'd be the 10:05 candle. So no, what are we looking for? Number 4, break of candle for entry. So that would be our entry level. Stop loss will go above the previous low, or the previous high in this matter, and our take profit will be a 1-to-1 risk to reward ratio. In this sense, it went for a 1-to-5 risk to reward, almost a 1-to-6. But with the win percentage of this skill, or this strategy, with the consistency of this strategy, I'm fine with my 1-to-1. I may leave it running sometimes, depending on volume, depending on if we're under the 100 EMA, which in this case we were. It actually wicked the 100 EMA, which was a better confluence. So that would be a supply zone, or a supply setup. Let's see if I can find you guys a demand. Okay, so I found a demand setup for you guys. First of all, we're above the 100 EMA. We see volume in the market after 9:30. So here we have boom, break of structure, boom, another break of structure right here. So we're in the uptrend. We have a higher high, a higher low, and a higher high beating this. Going past this previous high. So that's our break of structure right there. We have a red candle before the move with a gap. We have a tap into our demand zone, and we have a break of candle. Stop loss below there. This with a stop loss of 17 pips. On NAS, I will do a 1-to-2. I'll go ahead and get that 1-to-2. Or you could go for the previous high, being a little more than a 1-to-1 risk reward, but I would have went for the 1-to-2 risk reward. This ended up being a big move, finishing out New York session. Let me know if you guys want a part 2 for this video. There's a lot more to this set of this strategy. This was kind of on the fly. If you want a part 2, I'll bring y'all some better setups. I'll bring y'all a live trade maybe. I'll show y'all some profit splits that I received off this strategy. Any questions, comment. Make sure to like, subscribe. And until next time, I'll see y'all.